Ivan Feinseth here, Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners. Good to see you. Look, can you believe what's going on with NVIDIA? Yesterday, we got the news that you had the administration helping NVIDIA. Now they can send the chips. That jumped, and also the NASDAQ closed at a record. What happens here? Because, you know, what we saw was Huawei taking some of NVIDIA's business. So what does this mean now to have this ban lifted? Does it really help in a big way? How do you quantify it?
First of all, it's all NVIDIA all the time. They are the driver of this whole AI theme, and it's all AI all the time. You see how much money is every day being allocated to building AI infrastructure, data centers. We saw this big announcement yesterday in Pennsylvania for the building of power of the power data centers. So this is the new industrial revolution. It's all being driven by NVIDIA. Specifically, NVIDIA had taken a $4.3 billion charge in Q1 on inventory that they couldn't ship to China, and then also really lowered Q2 revenue by $8 billion. So this ban removes that, and it opens up a huge market for them. And NVIDIA is the leading supplier of the AI processors, and that they also have the software that enables the programming of these AI processors that only runs on their processor. So their software only runs on their processors. So they have a huge moat.
At $171 today, do you buy it? Where does NVIDIA go? You know, 6 months, 12 months, 5 years?
I have right now, we have a buy rating and a 220 12-month target price, and that was from earlier this year. And I'm sure after this quarter that they're going to announce in the latter part of August, we're going to be raising our price targets and estimates as well, because the momentum they have the momentum and they're driving the momentum. So they have nothing but tailwinds.
Yeah, and meantime, I mean, when you look at the group and the world of tech, do you have other names that this one you had to buy in a 220 target from a time ago? I mean, now it's getting closer to that target, but you picked this some time ago. So really ahead of your game there with that. So well done, kudos. What other names do you have in the world of tech that you still have a buy that you really like?
Well, all of the data center infrastructure service providers, Amazon, AWS, Microsoft, Oracle, and Google. These are all part of this whole mosaic of that's creating the AI infrastructure and data center infrastructure. Then I like enterprise software companies like MongoDB and Monday.com, and then PowerPlay, Oklo, which has really done well, and they're just every week they have a new positive press release that's and including last month, President Trump signing the executive orders to accelerate the development and creation of nuclear power reactors. So nuclear power is one of the cleanest renewable energy sources that there is, and everybody is warming up to it. And then, land. So you need, for data centers, you need 4 things. You need land, water, power, and connectivity. So I like Texas Pacific Land, which owns a lot of land with tremendous water rights. So does Land Bridge. So these are also plays. They had run up recently, a few months ago, in this whole enthusiasm. They're tremendous buys here. They pulled back significantly. But you need land to build these data centers, and you need to build them in a lot of places, because the closer they are to where you're accessing the data, the faster the connection is.
Let's take a look now at a whole nother category, and that is the cruise lines. Over the years, especially after COVID, you went out on a limb and you were saying people want to cruise, they're going to rebound spend, and they did. And the cruise lines did very well. Now what? What do we see here now?
Continues. More and more people want to cruise. They've got tremendous momentum. Younger people are cruising. It's the sweet spot of the cruise industry is the multi-generational family vacation. And now the cruise industry is getting ready to roll out these new land-based destinations. Royal has done tremendously well with their, Perfect Day at Coco Cay that they've put a lot of money into, and they're going to open up a perfect day Mexico land-based destination. They have the Royal Beach Club that is opening in December, and that will have the world's largest swim-up bar. And I don't know what it is, but just sitting in the water having a drink is a lot of fun.
Not too
So,
terrible. I mean,
and
what's
then of
the
course
upside for these
Norwegian.
names? Yeah, which ones are the ones
Well,
that Norwegian you like the best, right?
I like Norwegian. I like Royal, and I like Carnival. And I all think
Wow.
that they each have unique factors. They are all bringing on new ships, and they are all investing in land-based destinations. So, no, Carnival has Celebration Key. Norwegian is made a huge investment in upgrading their Great Stirrup Cay, and they're building it. That will open this December. They added a pier that can handle 2 ships. They're building a 28,000 square foot swimming pool with cabanas and lounge chairs and also a swim up bar. And these are just becoming great destinations as part of the cruise experience.
And I mean, finally, just all the news from Washington: inflation, labor, Fed, tariffs.
Well,
Give me something to sink my teeth into here. I mean, you're watching all the headlines. What do you think matters
yes.
the most for investors?
Well, the number one thing is still revenue and earnings growth, and I think we're going to see a lot of surprises in Q2 results. The bar is low, and companies they were giving cautious outlooks, during April when they were announcing their Q1 results, not knowing what the impact of tariffs would be. We've seen the market sold off in April, has come roaring back. In fact, in April, I did say we would see new all-time highs in the S&P 500 by midsummer. So here we are. It's going to continue. President Trump wants to fight tariffs with tariffs. He wants global companies or foreign companies to invest in the U.S. and have what is sold here made here, especially not T-shirts, but more higher priced things like cars, computers, electronics, processors, pharmaceuticals. And we are seeing that trend tremendously. It's just endless with the companies that are committing to capital investment in the U.S. to build factories, to expand factories. Even GM recently announced another $4 billion investment in auto factories in the U.S. to bring Mexican production back onshore to the U.S.
Okay.
So this is a powerful trend that's going to continue. I do believe that Powell should have lowered rates a long time ago. I think the Fed funds rate should be in the mid threes to keep it in parity with the U.S. Treasury yield curve. But um, fighting with President Trump, fighting with him, I think Powell will only dig in his heels and not lower rates, even though he
Uh-oh.
should.
Right.
From inflation, he has been fearful of the unknown impact of tariffs that will have on inflation, and it hasn't happened. We saw a slight indication of that yesterday in the CPI, but now the PPI was down. So tariffs are being well managed. And I know every month when we go through, well, it'll be next month and next month as we run out of the pull forward inventory that was bought, earlier in the year ahead of tariffs. But I think that President Trump will win this trade war and increase onshoring and production in the U.S. And therefore tariffs will not become a major impact. And the more we increase
Ivan, great.
production, we
Yeah.
also decrease prices. So I'm very
Great to
bullish.
see you, Ivan. Thank you. I
You
love it.
too.
I love that you're bullish, and people for their 401ks and IRAs, if you're shorting the market, you don't love that. But for someone who's here for the long term, they want to see new highs. Ivan Feinseth, great to see you. Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners.